I hate having to come out here again. It's like I'll do a video on, this guy, the Australian hedge fund, he's dumping $2 billion back in his customers' laps. I don't want it anymore. The stock markets and the housing markets are going to crash soon. I can see it. I don't want to be responsible. Here's your money back. I'm reading your stories, SRS Rocco report. This is looking bad for the oil industry and gas industry. It's going to bring the markets down, bonds, yada, yada, But again, information is information. And I'm the kind of guy, I don't care what it is. I don't care how horrible it is. I don't care how unicorn-friendly happy it is. Information is information. I try to think like a computer. Information in, information out. Or as they used to say, garbage in, garbage out. And if this can help me make a good decision in my life, financially speaking, like get the hell out of the market and get into precious metals or get into Bitcoin and something else, then I want to take this bad news and turn it into good news, which is why I repeat these for you guys to do the same damn thing. TheEconomicCollapseBlog.com, Michael Snyder. Not 5 bozos, not 5 armchair quarterbacks, not 5 J Snip 4s behind his computer and his green screen. 5 highly respected financial experts that are warning that a market crash is imminent. If everything is going to be just fine, why are so many big names in the financial community warning about an imminent meltdown? Which is interesting because Lindsay says we're going to have a melt up. Maybe they'll get it wrong and Lindsay will get it right for once in the last several years from his friend. I don't think that I have seen so many simultaneous warnings about a market crash since just before the great financial crisis of 2008. And at this point, you would have to be quite blind not to see that stocks are absurdly overvalued and that a correction is going to happen at some point. And when stocks do start crashing, lots of fingers are going to start pointing at the president, which is President Trump. But it won't be his fault. That's what he's saying here. It will not be his fault. It's not. It doesn't matter who's in charge right now. This is going to happen no matter what. The Federal Reserve and other central banks are primarily responsible for creating this bubble, and they should definitely get the blame for what is about to happen to global financial markets. My regular readers are quite familiar with my thoughts on where the market is headed. So today, let me share some thoughts from 5 highly respected financial experts. Number 1, this is a guy I just talked about. When Altair Asset Management Chief Investment Officer Philip Parker was asked if a market crash was coming to Australia, he said that he has never been more certain of anything in his life. In fact, he is so sure that the investments that his hedge fund is managing are going to crash that a decision was made to liquidate the fund and return hundreds of millions of dollars to his clients, which I've already read you that this morning, the first video I did. Number 2, Seth Klarman leads one of the biggest hedge funds in the U.S., and he believes that U.S. investors are greatly underestimating the amount of risk in the market right now. Quote, when share prices are low, as they were in the fall of 2008 into early 2009, actual risk is usually quite muted, while perception of risk is very high, Klarman wrote. By contrast, when securities prices are high, as they are today, the perception of risk is muted, but the risks to investors are quite elevated. Klarman oversees one of the U.S.'s largest hedge fund firms with some $30 billion under management. He has a huge following on Wall Street. Investors named his book, Margin of Safety, their favorite investment book in a recent Sum Zero survey. Number 3, Bill Blaine is a strategist, not to be confused with the street magician David Blaine. That's a different guy. That's somebody else. Bill Blaine is a strategist at Mint Parkers, and he is actually specifically pointing to October 12th as the date when things will start to get horribly interesting. And he's actually linking to a Zero Hedge article from May 22nd that I did not cover. But he says in the Zero Hedge article, Bill Blaine, my prediction is that around October 12th, markets will get horribly interesting. I don't think I did a video on this anyways. But let's continue, right? He says, but catch a falling knife, why don't you? I shall spend the summer wondering just how long the stock market games continue. When, not if. At the moment, my prediction is October 12th. Around that day, it's going to get horribly interesting. Why that particular day, he says? Gut feeling and knowing how the bowl of petunias felt in Hitchhikers. Not again. There are just too many contradictory currents out there. The unsustainability of burgeoning consumer debt, unfeasibly tight credit spreads, the sandcastle foundations of student loans, autos, housing, and the CLO market, China, Trump, politics, worries about the follows of what follows, Brazil, in the emerging markets and whatever, the risks of a massive consumer sentiment dump. That was just part of what he said. Number 4, David Stockman. I've mentioned this guy numerous times. He was the dude that worked under the Reagan administration. You know, when I see him say something, I pay attention. He has also been warning about what may happen this fall. According to Stockman, the current stock market bubble is the greatest suckers rally we have ever seen. He's actually calling it what Ken Fromm, Lindsey Williams' right-hand man back in the day that was really good, called it. From 2008-9, when this market corrects, it's going to go up. It's going to be the biggest suckers rally we've ever done. That's what he said. We're going to pull every last sucker back in before we pull the rug out. David Stockman's calling it that. He says the market is insanely valued right now. They were trying to tag the robo machines and day traders. They were trying to tag 2,400 on the S&P 500. They ended up at 23.99, I think. But the point is that represents about 25 times trailing earnings for 2016. We are at a point in the so-called recovery that has already lasted 96 months. It's almost the longest one in history. What the market is saying is we have reached the point of full employment forever. There will never be another recession or any kind of economic surprise or upset or dislocation. The market is pricing itself for perfection for all of eternity. This is crazy. I think the market could easily drop to 1,600 or 1,300. Assuming he's talking about, again, the S&P, not the Dow. It could drop by 40% or more once the fantasy ends. When the government shows its true colors, that it's headed for a fiscal bloodbath when this crazy notion that there is going to be some Trump fiscal stimulus is put to rest once and for all. I mean, it's not going to happen. They can't pass a tax cut that big without a budget resolution that incorporated $10 trillion or $15 trillion in debt over the next decade. It's just not going to pass Congress. I think this is the greatest suckers rally we've ever seen. And by the way, because he's mentioned this a little while back, this isn't like brand new, this David Stockman. What is brand new is that the Obamacare repeal and replace, it's off the table now. It's off the table for up to around 90 days. They said, we need 90 days on that now. And as I said, it is the tax reform stuff is contingent. That's what they were saying, so that's why I'm telling you, is contingent on repeal and replace. Without repeal and replace, they cannot continue with the type of tax reform that Trump wants. It will not work. It has to take care of Obamacare first, because there's kind of $1 trillion taken out here, there, whatever. That has to, I don't know the whole thing off the top of my head, but it had something to do with like $1 trillion being taken out of that. Let that thing be redone to Trump care, whatever, and part of that trillion will go over here into the tax thing as basically, like he said, add 10 to 15 trillion to the debt. This would be like adding $1 trillion to the debt, but it has to happen through Obamacare for some reason. So that's already, now we've kicked it 90 days. Well, I just want to tell you, we're at the end of June. May. June is literally a couple days, a few days from now. So I'm just going to say we're in June 1st today. June. What's 90 days? June, July, August. My favorite month, September. Ooh, September 23rd, the day in the movies. Also between October and September, like this guy's saying. He thinks it's October 12th, right? Isn't that amazing? At number 5, last but certainly not least, David Kranzler of Kranzler Research seems quite certain that the stock market bubble is getting ready to pop. Anyone happen to notice the several market commentators have argued that Bitcoin is a bubble, but the same stock experts look the other way as the U.S. stock market becomes more overvalued by the day versus the deteriorating underlying fundamentals? Bitcoin going parabolic triggers alarm bells, but it's okay if the stock price of Amazon Inc. is hurtling towards parity with the price of 1 ounce of gold. Tesla burns $1 billion per year in cash. It sold 76,000 cars all of last year. versus 10 million worldwide for General Motors, by the way. Yet Tesla's market cap is 51 billion versus GM's 48.8 billion. All right, yeah, that's what we say. Yeah, this is sane. This is normal. This insanity is the surest sign that the stock market bubble is getting ready to pop. If you read between the lines of the comments from certain Wall Street analysts, the only justification for current valuations is central bank liquidity and Fed support of asset values. This is the most dangerous stage of a market top because it draws in retail mom and pop investors who can't stop themselves from missing out on the next sure thing. There will be millions of people who are permanently damaged financially when the Fed loses control of this market, or as legendary vulture investor Asher Edelman stated on CNBC, "I don't want to be in the market because I don't know when the plug is going to be pulled," he said. Could all of these top experts be wrong? It is possible, but I wouldn't bet on it, he says. And that's what I've been saying here lately. Sure, like Lindsay's new data, supposedly, his elite friend who gets it all wrong now is now going to get it right, supposedly. Market melt-up. Could it happen? I gave you reasons why it could. But as he said, I wouldn't bet on it. I'm not going to play that game. Every stock market bubble of this magnitude in the United States history has ended in a spectacular crash, and this one will not be any different. We can certainly have some good arguments about the exact timing of the next crash, but what everyone should be able to agree on is that a crash is coming. You only make money in the stock market if you get out at the right time. Many of those that timed things will have made a tremendous amount of money, but most investors will be entirely caught off guard by the market implosion that is rapidly approaching. As I have explained to my readers repeatedly, markets tend to go down a whole lot faster than they go up. And in the not too distant future, we are going to see trillions of dollars of investor wealth wiped out very, very quickly. Let's hope that the coming crisis will not be as bad as 2008, but I have a feeling that it is going to be much worse. We didn't learn our lessons the last time around, and so now we are going to pay a very high price for our stubbornness. Again, flawlessly said, right? Flawless victory from Michael Snyder. 5 experts. Again, these are not bozos. These are guys that know. They do this stuff for a living. I don't do this, reading you this stuff. I find this the interesting stuff that I find most important. And sure, I've become, quite educated on this stuff over the years of doing this. But you can't put me in the same league as, for example, Stockman, David Stockman. Come on. Kranzler? No. I'm more the news guy of telling you, hey, this is important, pay attention to this. Hey, I got something new for you today. Oh, here's something I thought would be new. It's not new. I've told you this 400 times now, but it looks like it's getting closer, so check this out again. Just keeping you informed. That's all I do, but I'm finding the right guys. I'm finding the right information. This is not hocus pocus. This is not internet conspiracy. This is real. So, again, you got to prepare. Precious metals, and as that one guy mentioned, Bitcoin, cryptocurrencies. Have you seen the stock market move up like these cryptos here recently? Not, as Lindsay Williams would say, not on your life. Bitcoin, USD, where are we at? Just curious. 2278 at the moment. Ethereum, USD, where are we at on that one? 190, is it 191 already again? Hold on, page is not loading. Here we go. Holy crap. Ethereum is already back where it left off, 193. Now, granted, not the very high of 222 or wherever it hit, but it just seemed like a week ago it was 190 something. I was playing around with Ethereum at 190 something, and I was converting them into the Veritasium and all that stuff. I was playing with Zcash, which is up to $200 again now. So just to give you an idea, and that's when I was in at 227. I was in at 227, sold at 270, I think, or 230 something. I keep forgetting. But it's already, you know, the low here recently was get ready for this. Today's the 29th. On the 27th, so just 2 days ago, the low for Zcash was $143. Okay? Right now, right this second, it's touching $200 right now. Imagine if, again, sold low, buy high. Again, if you play these games properly, boy, could you make some money. But anyways, that's it for now. Take care.